Up, YouTube? It's your boy, Billionaire Brick Man, and today we're back with another video. Today, man, I got a good video for you all today, man. Today we're gonna go over two trades that I caught today, man. I'm so proud of myself. I caught two trades today in opposite directions and made money on both trades. I caught a sale today, making $1,000, and I caught a buy today, making $300, man, all in the same session. So we're gonna go over my mindset behind the trades I took, basically the psychology on what I was thinking before I took the trades, what I was looking for, and things in that nature. So I know you all are probably looking at my chart like, oh, that's so cool, but why doesn't he have two different color candles? So basically, I put all my candles as one color. It's a psychological hack. Because one thing that I noticed was I know how to trade very good, but when you're looking for a buy and you're in a buy position and you see big red candles going down, you might want to exit. You know what I'm saying? You might want to change your mind. You might want to move your stop loss X, Y, and Z. But it's like when all the candles are the same color, you don't know if it's an up candle or a down candle. You just simply looking for your strategy and your entry model and liquidity sweeps and X, Y, and Z. And it basically focuses you to just focus on your strategy. It's a psychological hack. Anybody having problems with their trading, moving their stop loss too early, getting in too early, X, Y, and Z, I feel like you should practice trading with one color on all the candles. Because when all your candles are the same color, price is easier to read. That's why I have these two words right here. We have money and money. Which one is more easier for you to read? The first one or the second one? Which one is more easier on the eyes? It's the second one. The second one is easier to read than this one. This one looks just jagged. This one looks smooth and crispy. You get what I'm saying? So if you want everything to be smooth and crispy in your mind, go ahead and put one color, any color but red. Do not put red. Reason behind it is because red is a low frequency color. That's why stop signs are red, and that's why red lights are red, because it's a low frequency color. Stop. Red means stop. Red is a low frequency. Green is a high frequency color. Green means go. You think they chose those colors for a reason? I mean, you think they just magically said, we're going to make this color mean go, which is green, and green happens to be a high frequency color, and we're going to make red mean stop. And red happens to be a very low frequency color. You think that was by coincidence? No. So put your candles at one color, any color but red. Okay, boom. Okay, with that being said, we're going to go over the trade that I took today. The trades that I took today. So today, honestly, if you want me to be real with you, today I didn't know if I wanted to be bullish or bearish. I was just like, whatever setup I see, I'm going to take it if it aligns with my strategy. So right here we have London session high, London session low. We have Asian session high and Asian session low right there, as you can see, marked out on my charts. So typically, if I'm looking for sales, I want to see price take out London session high. And if I'm looking for buys, I want to see price take out London session low, which it did right here, or Asian session low. We're looking to basically go in the opposite way. So price coming down to take out Asian session low and London session low. We're not looking for sales. We're looking for buys in this area. Price came right here to take out London session high. I look for sales in this area. So we're going to go down to a smaller time frame. All right here. We have London session high right here. As you can see, I like to keep my charts very crispy and clean. So I'm going to go over the first trade I took. So the first trade I took was right here. I took it around 8 o'clock in the morning. You know, 8 to 11 is that New York kill zone. So right here, price took out London's high early. I normally look for it to take it out around 8:30. It was 6:40. It took it out, came back down, and it took out this recent high that it made again, causing price to be overbought, extremely overbought, meaning look for sales. So price took out this high and started coming down. I stayed on this time frame because I didn't know. Like I didn't want. I normally go down to a smaller time frame after a high is breaking and look for market structure shift with displacement. But for some reason, I didn't know if the bias was gonna be bullish or bearish, so I simply stayed on this time frame because I know the higher the time frame, the more it's gonna conform. So I know it would conform off of the 5 minute, stronger than the 2 minute. So I just stayed on this time frame. So right here we have a swing low that was broken right there with the fair value gap. Once the swing low is broken with the fair value gap, we simply enter for a sell. So I caught sales right here. I did. I think I caught this trade was I made $1,000, but I don't know. Okay, so I sold right there, and I think I put my stop loss up here, and I aim for a 2-to-1. I aim for a 2-to-1 right there. So you enter in on this bearish fair value gap. As you can see, price almost stopped me out. I was supposed to put my stop loss right here above the high of that first candle, but I gave this trade a little bit of room simply because I felt like I was like, I don't know. Like I was confused, but I was also like, this is my strategy right here. It just did everything early. So I was basically just like, okay, if it should conform, but it may do like some crazy move to try to stop me out like it normally does. And that's exactly what it tried to do. And as you can see, risk 500 to make 1,000. Price came up. It didn't stop me out. And then price just dropped from there, hitting TP2. Excellent trade. I got out at this area not only because it was 2 times what I was risking, it was because it was below this low right here, and I know it's liquidity resting below that low. So I know in this area, a lot of people are going to enter for sales because they're going to be entering into the market late. So right here, a lot of people sold today. Unfortunately, one of my friends today placed a sale in this area, the same area that I bought in. I got out right here, and this is where he was entering for sales. So it was unfortunate, but he just read it wrong. We all make mistakes. Only thing is you're gonna learn from your mistakes, and he did learn from his mistakes. He know what he did wrong, and he know what to do going forward in order to become a profitable trader, and that's all that matters. And that's what I like about him. He's very consistent. He's very persistent. He is very ambitious, and he has the spirit of a god. He has the spirit of a champion, and he's going to kill it this year. 2025 is definitely his year for sure. So right here, we ended up getting out. We got out right here at sell side liquidity. So that was the sale that I took right there. I took that trade right there. Okay, the second trade that I took today was a buy. And I'm finna tell y'all why I bought. So I end up buying right here because this is my strategy. 8:30, we want to see a low taken out on a 5-minute or the 15-minute chart if we're going to be bullish. As you can see, price again, early as it has been like this last week too, taking out moves earlier than expected. So at 8:20, at 8:15, this low right here was rated already. So basically, I waited for 8:30, which is right there, and I was like, okay, it's 8:30, but the low that I normally look for to get rated after 8:30, it's already has been rated right here. So what did I do? I simply went to the 2-minute chart because, like I say, when price takes out an area of liquidity, I go down to a lower time frame and I wait for market structure shift with displacement. I wait for a high to be broken on that time frame. This high was broken on this 2-minute time frame. The 2-minute time frame is my entry time frame, and sometimes I use the 5-minute. It just all depends on what's going on. So as you can see in this trade, I use the 5-minute instead of the 2-minute. So on this trade right here, this swing high was broken after the liquidity was taken on a higher time frame. This is a 15-minute low right here. So the 15-minute low was swept. I went to the 2-minute. I waited for a swing high to be broken right here. Once that swing high was broken, I looked to see if the leg that broke the swing high has a fair value gap in it, and it does. Right here, this high to the low of that third candle right there. And as you can see, price came down into the fair value gap, and I simply bought right there. Now on this trade, I could have made way more money than what I aimed for, but I just simply got in and got out, risking 150 to make to make 300. So as you can see, this trade panned out quick. A 1 to 2 is right there. So as you see, this is a 2-minute chart, 2, 4, 6, 8, 8 minutes. You get what I'm saying? I could have aimed, like, farther targets that I could have aimed for. I could have aimed for this swing high right here. And I could have aimed, like, these are targets, bro. I could have aimed for this target right here. And I could have aimed for this target right here, which is basically Asians high. I could have aimed for Asians high, essentially. So I could have aimed for right here. It would have gave me a 5 to 1, which is a good risk to reward. I could have aimed for this target. It would have gave me 8 to 1. Then I could have aimed for Asians high. It would have gave me a 9 to 1. And as you can see, it finished at 9.12, and we would have entered at 8.36. Yeah, like 8.36. So that's literally less than an hour. That's like 45 minutes or something like that. So if I would have risked 1,000 on this trade, I would have made 9,000 in 45 minutes, which is kind of crazy. So as you can see, like I told you all before, the way that I enter, I get out at 1 to 2, but the move is always like crazy, bro. Like, it's always a crazy move. Like, I can be catching crazy moves. Sometimes I do. Sometimes I hold on, but I don't like to really hold on if I'm not going to be watching the chart. These trades that I took today, I was literally watching the charts the whole time. If I would have took this trade right here, I mean, I could have held it until price got to TP2, and then I could have moved my stop loss to break to TP1, and then just let it go all the way up to Asian sessions high. And if I got stopped out, at least I would have got stopped out at TP1, which is 150, which is good. You get what I'm saying? So, but also that trading like that can sometimes bite you in the ass, because on this trade right here, when I entered on a 5-minute fair value gap, I aimed for a 1 to 2. And it literally gave me a 1 to 2 down here. If I would have aimed for a 1 to 3 or tried to get fancy with it, so to speak, aiming for these lows right here or this fair value gap right here, as you can see, I would have got stopped out. So that's why, for the most part, I just simply aim for a 1 to 2, because I'm not trying to get stopped out trying to aim for a 1 to 5 or a 1 to 6 when I could have made 2 times what I was risking if I would have just aimed for a 1 to 2. And also, I just came to realization that while these moves are sweet to show, like, oh, I caught this move, it's good to, do those moves from time to time, but don't get in the habit. I would say get in the habit of just aiming for a 1 to 1 or 1 to 2, because I personally feel like it doesn't matter. Honestly, I feel like the goal of trading is to make money, and I feel like it doesn't matter. Like, I'm gonna give you an example of why I keep saying it don't matter. Like, what you mean it don't matter? It's more money. No, it's not. Because somebody can press buy right here, right? And somebody can press buy right here in the same price. And we can both risk the same amount of money. You get what I'm saying? And we can both aim for the same target. But you can risk $1,000 on this trade, and I can risk $5,000 on this trade, and we both get out at the same price. But I made, 15,000, and you made 3,000, and we both entered at the same price and got out at the same price. That's why I don't really be worrying about catching big moves. I just change my lot size. Like, on this trade, I aim for a 1 to 2. I risked 500. I made 1,000. You get what I'm saying? And I got out right here. If I would have tried to hold it, I would have got stopped out. I could have risked 1,000 on that trade to make 2,000. Price would have hit my TP. Same with this trade. Like I said, I risked 150 to make 300. Price hit my TP. I could have simply risked 1,000 to make 2,000. Price would have hit my TP. You get what I'm saying? So it doesn't matter about catching big wild moves. It's about following your strategy and making money. You want to make money, that's all. Sometimes aiming for those big colossal moves will cause you to not make money or get stopped out at break even, and that's not the risk I'm willing to take. I would like to solidify my profits continuously. You get what I'm saying? And don't play around with it. So, like I say, this trade right here, we took a sell after price took out London's high, and we rolled it down and got out at this area of liquidity. And this trade right here, we took a buy. So I literally entered on both sides of the market, and I made money today. Now, one thing I seen that I could have did differently on the first trade that probably would have been better. The only reason why I didn't is because I like to enter close to 8 o'clock, between 8 to 11 a.m. So basically, when price took out London sessions high, it was reaching for Asia's high, but it didn't take it out. But also, we have this sweep right here as well. So it took out London high and swept this high on the 5-minute. I should have went down to the 2-minute and waited for a low to be broken with the fair value gap. So right here, this low was broken and the fair value gap was created and traded into right there. So basically, this is something that I seen. Even though I made money, I always try to get better and better. So I'm like, oh, this is something like that I seen that I could have did better. Instead of waiting on the 5-minute for everything to pan out, you gonna follow your rules. You gonna trade early, do it, but do it all the way. Follow your rules all the way. When that sweep happens, go down to the 2-minute and do and let price do what it do. Don't play around with it. So basically, I should have had a little bit more confidence. But like I said, I was uncurious. Not uncurious. I was unsure about the direction of today, so I was a little hesitant. That's why I waited for price to conform off of the 5-minute versus the 2-minute. But I seen that if I would have did it off the 2-minute, it would have panned out. The liquidity sweep happened. The low right here was broken with the fair value gap. You would have literally entered the trade right here, and you would have entered for a sell. And let's see what we would have got. We would have put our stops. Like, some people teach that you can put your stops right here above the high of the first candle. That's what ICT teaches. Michael Huddleston, he teaches that when you enter at the fair value gap, to put your high literally at the high of the first candle. Me, I like to put my stop loss right there, or sometimes I put my stop loss at the high of the second candle. Most of the time, it's at that high of that second candle, bro. I don't know. A lot of people say that's a close stop, but for some reason, price, it don't be really, it barely stops me out. Like, it's like a 85% chance, or 85% chance that it's not gonna stop me out. As you can see, it wouldn't have stopped me out. I could have aimed for a 1 to 2. These are very quick trades, bro. Look at that. I could have aimed for a 1 to 2. This is a 2-minute chart. 2, 4, 6, 8, 10. I literally would have hit TP in 10 minutes. So how I risked it at 500 to make 1,000, and I had got out down here, I could have just took the same trade, but on the 2-minute right here, and got out faster. Or I could have aimed. Here we go, y'all. I could have aimed for that same area of liquidity to get out at based off the 15-minute, and the trade would have been a 1 to 6. And as you can see, I wouldn't have got stopped out. It would have barely stopped me out, but it did not stop me out. As you can see, I would have entered at 726. I would have got out on this candle right here at 814. That's not even an hour. That's less than an hour. So let's say I would have risked 1,000 on this trade. I would have been risking 1,000 to make about $6,900, and it wouldn't even have took an hour to pan out, which is crazy. So I hope this video was insightful to you all. All the videos that I have that are similar to this, basically videos where I post my my trades that I took for the day, basically giving the analysis and the thought process behind the trades and things in that nature. I have a playlist on my channel. It's called Day Trades playlist. and basically you can go to that playlist and you can find videos similar to this one. I also have a Forex psychology playlist with a couple of psychology videos that you all can check out if you just need to work on your trading psychology. Basically, watching those videos will give you the right mindset to have when it comes to trading. It will give you the glasses to put on your face in a sense, so you can see clearly on how to look at the markets. And also, last might I add, those are the two playlists that I have right now, but I'm working on the third playlist that I'm going to create, and basically that playlist will be a step-by-step guide on how to trade my strategy. It's called the Billionaire ATM Strategy. So I'm going to create a playlist for people who want to learn how to trade, because I know that for somebody who doesn't know nothing about trading, I'm speaking a foreign language right now. So I don't want to send people to other people's channel. Oh, go check out this person's boot camp, or go check out ICT 2022 mentorship XYZ. I will send people to those people. Like, I tell people who I learned from. I don't have a problem with giving people their props. Like, I learned from ICT on YouTube. You can type in Inner Circle Trader. His name is Michael Hudson. I don't have any problem with that. But I feel like I want to have the full package. So with this strategy, I want to create my own boot camp on my channel. It's going to be a playlist called the Billionaire Boot Camp. And basically, it's going to be a step-by-step guide on how to trade. And it's going to be for beginners. So it's going to be for people who don't know nothing about trading, because a lot of people who want help from trading or be wanting to tap in with me with the trading, they don't know shit about trading. Like, they don't even know what a candlestick is. They don't know what a high or a low is. So it's like, I can't make a video simply just teaching my strategy and giving it to somebody for free and just be like, oh yeah, they should be straight. No, I need to do it the right way and teach from scratch. And I'm willing to take my time out to make these videos to teach from scratch. So I'm going to create a whole playlist where I talk about candlesticks, swing highs, swing lows, liquidity sweeps, fair value gaps, kill zones. I'm gonna make it very simple, to the point where if a 10-year-old or a 15-year-old or a 13-year-old was to watch the video was to watch the boot camp playlist and they wanted to know how to trade, they will be able to learn from it. So I'm not going to leave anybody out. I feel like if I just skip to my strategy, that's leaving a lot of people out, because a lot of people not going to be able to understand what I'm saying. So I want to make it to where when you come to my channel, you can learn from scratch. I want everything to be original and everything to be taught from scratch. So be looking forward to that boot camp. Once I drop the boot camp, like once the boot camp is completed, I already have a Discord, but I haven't dropped my Discord yet. But once the boot camp is completed, I will officially drop Billionaire Trading Circles I'm talking about boot camp. Billionaire Trading Circles Discord, man, where me and some of my friends, we live trade every single day, Monday through Friday, 2 to 5 a.m. New York Standard Time, and 8 a.m. to 11 a.m. New York time. So it's gonna be very lit. It's gonna be very lit, man. We trade every day. We'll be killing it. Like I said, today I traded New York session. I placed 2 trades. I made money on both trades, and this is just an example of what's going to be going on in the Discord. I will be on the Discord every day. You'll be able to ask me questions. You know what I'm saying? Any question that you have, you can personally ask me in the Discord. You will be able to go live with me every day, Monday through Friday. And also on the weekends, we go live as well. I will be going live on the weekends as well, around probably like 8 p.m. or 9 p.m. Maybe 9 p.m. on the weekends. And basically the 9 p.m. sessions on the weekend would just be us going over the trades we took during the week, and just like giving motivation, people asking more questions, and just our future analysis for the next week. So what are we expecting to happen next week, etc., etc. Basically sharpening our skills, and just coming together as a family, man, to just push everybody to just do the best they can in the trading world, and just to just motivate people to just keep going, man. Because if you can get the psychology down pat, if you can get the technical analysis down pat, and if you can get the risk management down pat, those are the three major components of trading. And if you can get those three components down pat, then my friend, you have finally mastered trading. So with that being said, it's your boy Billionaire Brick. I hope everybody has an excellent, exquisite, fantastic, productive day. I don't want to see anybody being lazy today. Go out there and chase your dreams. Don't be lethargic. You know what I'm saying? Attitude determines your altitude. Nothing changes if nothing changes. And with that being said, we out. Peace.